Hey there, folks. Going to wrap up April here with a quick market review, looking at the last week of April. Heading into May, my last video I mentioned I would expect some downside slightly with some chop, but I believe I did call out a caveat that we have tech earnings. So we kind of got the action I expected, maybe not. I didn't expect as much of a rise here, but we kind of had that slow, range-based, choppy market sideways action here. 23rd and 24th saw kind of the same prices. We even dipped back into them into the end of April. But we had a really big day here on the 30th and kind of had these slow melt-up moves with nice gap kind of action in future sessions, which left us trading inside of pre-market ranges. Incredibly annoying, honestly, from a trading perspective. On my part, I did pretty decent on a couple of days, trading some SPX flies and different similar trades like iron condors. But overall, I think directional traders probably had a little bit more of an annoying time. One thing that I want to call out here is while our sectors are looking red, the percentages continue to go up as far as how much of each sector has holdings above the 200. Where it gets kind of exciting is you look at the 50, and we're starting to see some green light up here. So we've got some heavier sectors here. Utilities has been green, but industrial is starting to tick up. Real estate's starting to tick up. Growth is ticking up, which I guess maybe with earnings that makes a lot of sense. And then on the 20 SMA, we definitely saw that pick up as we started to break out of yearly value here for SPY. So that's pretty exciting. Also, the top 100 holdings of the S&P starting to curl up here on the longer term trend. And we're riding high here above the mid pivot for the fast trend. So all of that's in alignment, basically kind of re-showing us what we're already aware of, is that we had this kind of slow melt up day. There were was it 6 or not some decent consecutive count of days that are green, closing above the prior day. So we had that. I don't know about that. I've been reading this online, so I thought it was an interesting metric. That looks a little suspect to me, but yeah, pretty nice move up here, and we're just about ready to smack the 200. That's what this is here. So that's one outlook here from the weekly. We're going to land right here on the 50. So the 50 pretty much aligns to the 200 on the daily. So that one right there. And from a weekly standpoint, we have yet to flip our trade seekers regime model to long status here, but it doesn't necessarily mean there aren't opportunities below that. It's just kind of the outlook overall. So we kind of had the same situation back in 23. I'm really hoping it's not this kind of situation here that we had back in 22. So we're just going to keep watching that and see what we find. But for now, I'm using daily time frame to kind of get the scalps and find those intermediate trends. Yeah, let's flip over here to a little bit broader view for bottom signals on the markets. Looking at the S&P, we already saw that one. The NAS and the Dow and the Russell, all kind of the same thing. They're all flipping to a bullish narrative here. So that's pretty exciting. Heading over to the daily volume profiles here on the futures markets. I like to look at this for just a complete data aspect. Futures market trades the longest, and so when I'm looking at the value, I want to see where the futures markets are headed. And looking through April here, the last part of April, we can see pretty decent action here. Value areas day over day are on the advancement. We had a real decent pullback here on the 30th, that day that I was talking about earlier. Notice the value area, even though we had this deep retracement, the value area is still on the high end of the profile, which is what you want to see for any kind of continuation following sessions. And so we did have that. We had a Virgin PLC here. Gosh, I think this was back from March Yeah, something like that. And we hit that on Friday's session and managed to close the value way up high here. And most of the volume is up high. So as long as we can get that area to hold here on the ES market, then I think we're going to be looking at higher. Obviously, tonight's market open will potentially adjust that. But we have plenty of market profile style time Virgin POCs at 58.24 and 58.47. So we don't really start climbing into additional value until much higher, actually. Not much single prints on this inside of the profile. We do have a small gap area here, so hopefully we don't visit that, but anything is possible. I'm expecting this value area to hold should we decide to come back and retest anything. Nice D distribution here, which is incredibly annoying to trade, but can create some really good support there. We'll head over to the NASDAQ, and we pretty much have the same thing. So a lot of increasing value here on the advancement, and same kind of situation here on that 30th day where we have a very wide value area due to the retracement. Tap that Virgin volume profile point of control there, and then kind of just rip right up to the next one, which was at 2,000 or 20,060 ish. So same thing though for Friday. Close the value up high, really held that up. So we'll have to see if that maintains or if we come back to visit anything. I could definitely see this area from the growth market perspective. I can definitely see this area here. We got a couple single prints, nice big fat volume area to retest. So that wouldn't surprise me. Flip over to the weekly profiles. This is my first time actually taking a look at these after April has closed. So interesting that we have such a heavy volume area here, but we retested it this following week. I guess all my drawings would load if I bring that in. But so this 19,250, let's call it, up to this 19,580, I could definitely see from a weekly profile standpoint, if we fall back any, I could see this being a potential area of support. 20,000 psych number, not surprising, has a decent amount of volume, but not as much as down here. So that's kind of a that's kind of an anti-bullish case whenever we plant more of the value area at the low end of the week, which makes a lot of sense actually. If you look at this, we spent most of our time, our point of time point of control is also down here. So this bottom half, you can kind of see it. We spent 1, 2, 3, mostly 3 days here, and we only spent 2 days up here. So most of the value is going to be down here. So based on that, I would say I would expect us to come down and visit, which that's a decent amount of points. Yeah, it's about 650, 700 points there. So watch out for that. Let's look at ES weekly. I'm sure it's probably going to be pretty similar. Okay, so a little more positive, but still mostly on that bottom 2/3, right? We got this heavy area right here, right on that 5,560. So looking at last week, yeah, look at this. We got this here from 5520-ish, 5460. So this whole area here, we kind of got an advancement, but it's kind of weak. So keep an eye out for that. We're going to look at some intraday action here from the classic setup here, the internals with TWAP and prior TWAP session range here. So this is the first standard deviation range from prior day plotted into the next session. And if we just step back here, one thing that I thought was very interesting was how many days we had the top holdings in the market giving us a big bearish signal, and then we still recovered. So this is kind of what made this week somewhat annoying, is the top liquidity with the earnings coming up, the top growth names. really made it for a challenging market, I feel, where we're seeing red New York Stock Exchange here. We're seeing some heavy tick, and yeah, there was plenty of good shorts, but then hard to swing the whole day or a majority of the day when all of a sudden we just have these V formations. So MIT did a great job of bringing that to light. It's a possibility with the trend flips, and we definitely see a clear tick sentiment change. We're bear for most of the session, and then boom, we get this nice tick pop here. Top lick starting to pull back. Trends are flipping. The bands are still red, which means the ratios were bearish, but they're starting to pull back. Good TWAP recovery here, and then nice $4 move on that day. This day was absolutely terrible. Tuesday, where there's just no real clarity. We've got MIT just flipping directions every flipping 15 minutes. Top lick is, basically just chop zone. This was a tough one. Here's another one. We open up, top lick is bearish. We get that one-sided tick action. We're above TWAP by the time the orb is sealed. That initial balance is sealed as well, right around that 1030 mark. And we're still majority bearish on the New York volume, as well as the top lick, but yet we're having this annoying, slow melt up kind of movement. So this was an annoying day, but that's yet another day where the top liquidity is bearish, but yet SPY is floating up somehow. And then we have Thursday, May 1st here, same kind of open one-sided tick on a gap up, strong bull top lick, but then we just kind of melt sideways. Actually, we don't even come down, and we certainly aren't going up anymore, which then leads you to Friday, which kind of honestly is very similar with the melty kind of movement. And even though we've got a lot of strong bullish signals, we're just not seeing it come to fruition in the price action. And I think some of that is kind of baked in when we have these gap moves. And we just happen to also be already above that 2SD target that I typically look for when we're starting out kind of down here. And we have that classic 1230, 130 curl up kind of in the day long move. We get that big buy program that comes in. And so we opened above that. We did near perfectly wick low the high of that range, and then quickly scurried right back up here. But that was a tough one there to catch. I don't know. There's not really much information at that point. One-sided tick, very weak tick, and I don't necessarily trust the morning data here until things settle in. So overall, just kind of a strange week. Hopefully you survived. But just to kind of recap, looking here, I'm going to say the same thing I said last video. I am expecting a little bit of chop. I wouldn't be surprised by a little bit of a pullback, especially since we planted weekly value at the low end of the profile here. We do have some single prints here on growth. So definitely when you want to know if there's going to be a pullback or a nice strong rip, I tend to look at NASDAQ for that. So like I said, I hope you survived, and we're going to head into this new month. And we did start a new quarter as well recently. Tech earnings being over, I would expect hopefully a little bit more alignment to the internals. So thanks again for watching, and as always, happy trading.